Good people, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Guys, do me a big favor. Get down in that description box and click on that Instagram link. And give me a follow on Instagram if you do Instagram. If you frequent Instagram, you got an Instagram page. I would ask you if you are, you want to rock with me. Go down to the description box, click on the Instagram link for Richard Fain Millionaire Mentor. That's my brand new Instagram page that I've just created to have another place on social media that I can get in contact with you guys. Y'all can get in contact with me. I post content over there, albeit short content, and I post stories and things like that. So if you want to find out what's going on with me when I'm not on the YouTube platform, Instagram would be a good place to kind of keep up with me. I'm gonna be sharing some stuff about the lifestyle. Of course, I'm gonna be sharing stuff about how to get to your pot of gold at the end of the rainbow. Y'all know that first and foremost, that's what I do on that Instagram page. But we're trying to get it built back up because our old Instagram page that we built up to 90,000 followers, Instagram shut that page down in December of 2023 for no reason. Only thing I can assume, there was a lot of Richard Fain impersonators out there, and I don't know, maybe somebody complained and Instagram shut it down. They didn't give me no real explanation. So I had to create a new one, and that's what I've done. And we're up to about 2,500 followers at this point. And I'm asking you guys, if you do Instagram, hey, consider giving me a follow on Instagram. And it's easy. Just go down to the description box, 3, 4, 5 links down. You'll see the Instagram link for Richard Fain Millionaire Mentor. Give me a follow on Instagram, and then send me a DM and let me know you're rocking with me, and so I can personally thank you. So do me that big favor. Also, if you don't mind, guys, the website. The website is about 2 weeks old. And I gotta say, man, I looked at some of the analytics yesterday, and man, we got like 66,000 people have already visited the website. 66,000 people. And you got to remember, I don't do any advertising other than on my YouTube channel, right? This is the only place I really tell people about. On the Instagram page, I've done a few reels. On the Facebook page, I've done a few reels. But mostly where I tell people about my new website, Richard Fain Millionaire Mentor website at www.richardfain.net. Obviously, that's the second link down in the description box. That's where people have found out about it, is just through these YouTube videos. And over 66,000 people have already visited in the last couple of weeks. So I thought that was pretty good, seeing that I'm not running Facebook ads or Instagram ads or YouTube ads. I'm talking about paid advertising to drive traffic to the website. You guys have organically, through me reminding you it's there, you've been great about going over to the website and checking it out. So thank you. And a lot of you have picked up the digital products that we offer on the website to help you get to your pot of gold at the end of the rainbow. The key, guys, is taking information and then executing on that information. That's how you get to wealth. And we're giving you products and services over there that can help you do that. So if you don't mind, get down to the description box, click on that second link, which is the website link, and go check it out. You'll check it out, and then send me an email and let me know what you think about it. I handpicked those 10 digital products. We're going to be adding another 10 digital products here real soon, so we'll have about 20 on there. And they cover everything, man. They cover credit repair. They cover millionaire mindset. They cover stock market investing. They cover real estate investing, how to start an online business, how to grow your existing business. We also talk about budgeting. There's a real nice ebook that walks you through the budgeting process, and there's a worksheet that goes along with it so you can kind of, document your progress. Everything from A to Z, guys, to help you build wealth, you can get it there. So go check out the website, second link down in the description box. When you're there, consider signing up for the paid membership club. We're getting ready to kick off the live streams for the paid membership club the week of May 6th. So I'm getting everything together now. My daughters are in the background kind of working on things for me so that we're ready to go. And yeah, man, it's going to be fantastic. We're going to do those live streams, a 90-minute live stream every single week in the membership club. But it's going to be more of a Q&A. So remember how I used to do the Q&A live streams on Sundays? I'm not doing that anymore on YouTube. That'll be taken over to the membership club. Now, the thing about the membership club, obviously, we're not going to have as many people in the membership club that we have on the YouTube channel in the Sunday live streams asking questions. This is going to be a small group of people, just me and them for 90 minutes, and nobody on YouTube will see these videos because they won't have access to it. So that is where the real mentorship will take place, is in the membership club. That's the mentorship. So if you're a part of the membership club and you're a paid member of the membership club, that's where you'll receive the one-on-one mentorship from me through the live streams and through emails that you can send me back and forth. As a club member, you can send me emails back and forth, and those emails take precedence over any other emails, right? Remember, I'm a one-man show. So I got emails coming from YouTube, I got emails coming from Instagram, I got emails coming from Facebook. But the membership club emails are the ones that are going to take precedence. And here's why. Because these people have decided to make a financial investment in themselves. And I owe them a fiduciary responsibility to make sure I do everything in my power to help them get to financial freedom. That's the way it goes. That's the real world, guys, we live in. See, this fake world over here where people think, oh, you do all of this stuff for me and I shouldn't have to do anything for you. That's the fake world. That ain't the real world we live in. The real world we live in, people understand if I want something from somebody and that person can help me get where I want to go, it's okay if I make an investment in myself in order to get there. So those folks in the membership club are really my mentees. And I look at myself as sort of their mentor, right? That's how it is. That's the only, the membership club is the only one that I look at that way. Everything else, I just provide information. And that's okay too, right? But if you want to step it up and take it to another level, then consider getting over to the website, checking out the digital products, and then signing up for the membership club. That's where you're going to get the full effect of the mentorship going forward, right? YouTube is just going to be YouTube. I'll make videos, but that's it. Over in the membership club is where you'll actually get the one-on-one with me. So if you're interested in that, definitely get over there and check it out. Website link is down in the description box. It's the second link. The last thing I want to run by you before we get into the meat and potatoes of what we're going to talk about today is Moomoo. Y'all know Moomoo is my self-directed brokerage app of choice. And I've been using Moomoo since late January. That's when I made the decision that was going to become my primary brokerage app. So therefore, down in the description box is a link will provide you 10 free fractional shares of the Magnificent Seven. You guys know, if you've been watching me, you know who the Magnificent Seven is. It's Apple, it's Meta, it's Microsoft, Amazon, Alphabet, NVIDIA, and Tesla. That's the Magnificent Seven. Moomoo is going to give you 10 fractional shares of the Magnificent Seven when you open a new Moomoo brokerage account. You put $100 in there. That's the minimum you got to put in. You can certainly put more if you're serious about this thing and you want to really build wealth and use the app to do that, like I do and many others do, then put more money in. But minimum you got to put in order to get the 10 free fractional shares is $100. Now, then you take that $100 and you can continue to dollar cost average into the Magnificent Seven through fractional share trading, or you can also buy ETFs or any other individual stocks that you like, right? It's your choice. The key though is you're going to get the 10 free fractional shares of the Magnificent Seven, which is the top 7 companies in the S&P 500, right? No brainer in my opinion. I'm gonna get a world-class self-directed brokerage app. I'm gonna get 10 free fractional shares of the Magnificent Seven. And then I can use that brokerage app to put money in it and buy my favorite ETFs and my favorite individual stocks to build wealth. You can't beat that. So go down to the description box, click on that Moomoo link, open up your new Moomoo account today, go get that free stock, go get that free money. Well, guys, here we go. This is day 2 of the Fed meeting, Federal Reserve, the FOMC meeting. And it's going to conclude today, where the Fed is going to come out and say what they're going to do with interest rates. And that's where I believe the Fed is getting ready to make it super easy to buy stocks and to buy crypto to get rich. Well, Richard, how does that happen? Well, it happens because when interest rates go up, when interest rates stay up higher, what happens to assets? Ultimately, they go down in value. That's what's going to happen today. If you look at what's happening already in the pre-market, well, it's not pre-market anymore. The stock market is open, right? The major indexes are open. If you see what's happening with the major indexes today, if you see what's happening with the crypto market, you'll know what I'm talking about. Assets are selling off, right? The markets are selling off and assets are becoming discounted. And we're going to talk about why that opportunity is an opportunity for us to build wealth. If we know anything about assets, the best time to buy assets is when they're discounted. And then you just hold those assets till they trade at a premium again. So if I buy Apple at $160 a share and I hold Apple to $200 a share, that's how I build my wealth. See, I bought Apple at a discount at $160. I hold Apple till it trades at a premium again at $200. I just made myself $40 a share. That's how you make money, guys. This is how you build your wealth. This is how you get to your pot of gold at the end of the rainbow. See, I can buy NVIDIA at $760 a share. And in 1 week, it goes up to $877 a share. I just made over $100 a share on a really world-class investment that was trading at a discount for a few days, and I picked it up. If I buy Tesla when it was trading at about 142, 143 a share, and then a week later it's trading at 195 a share, I just made some net worth. So anytime interest rates are high or higher for longer, assets will trade lower. And that's what's going to happen today, in my opinion. Assets will trade lower. Why? Because the market already knows the Fed is not reducing rates today. The only way assets trade higher today if the Federal Reserve chairman comes out at 2:30 p.m. Eastern time today and says, listen here, investors, we're going to keep rates right where they are today. But guess what? We still are going to reduce 3 times this year. That's the only way the market trades higher today. If you don't hear those words, it's not going to trade higher, in my opinion. It's going to trade lower, especially if the Federal Reserve chairman comes out at 2:30 p.m. Eastern time and he's hawkish. It's going to sell off. Just letting you know. That's my opinion now. I'm not your financial advisor. I'm not some financial guru. I'm just a guy who's seen this happen many, many, many times, right? I know if the Fed chair comes out hawkish, assets are going to sell off. If he comes out dovish, assets may increase a little bit. I believe he's coming out hawkish. That's my belief. So I got my war chest ready to go, right? I got my money ready to go because when he comes out at 2:30 and he's hawkish, the market's going to sell off. And that's when I'm gonna go to town and pick up me some really nice winners at a discount. And then in a week or two, when they go back up in value, I'm gonna sell them. And I'm gonna make money. That's how you make money in the stock market, guys, short term. Now, everybody can't do that because everybody doesn't have the experience I have. Everybody doesn't have the war chest that I have. So what most of us gotta do today is we gotta just continue to just dollar cost average in, right? If we got a little bit of money, we wanna go ahead and double down on something that we've been investing in long term, then double down on it if you feel like it's right for you. I'm gonna do that. Oh, you know me, I'm a NVIDIA, Tesla, SPLG, FTEC. Those are my four, right? Those are, and Meta, let me throw Meta in there. Those are my five. That's what I look at today. I'm gonna look at those five, and after 2:30 p.m. Eastern time, when the chairman comes out and gives his little address to the world, if he's hawkish, I believe those five assets go down in value slightly, maybe a lot, who knows? But I'm gonna be ready to pick them up. That's how you get rich. That's how I'm gonna get rich today. I'm gonna get a little bit richer today if the Fed chair comes out hawkish. Now, if he comes out dovish, no problem. I keep my war chest on the sideline, and I already got money in the market to take advantage of the increase in value in assets if they go up in value today. See, I only take money out of the war chest, the reserve money, if I'm buying the dip. If I'm not buying the dip, I just invest regularly through dollar cost averaging every single month. Only time I buy the dip with the war chest is if assets go down significant enough for me to make money. And see, that's where I have my target price to buy, and I have a target price to sell. Well, how do you come up with that, Richard? There is no scientific way I come up with it. I just pick a number. See, that's what I'm trying to tell y'all, guys. I'm not going to sit here and try to look at charts and graphs and try to come up with some scientific. No. All I say is listen, Richard. Okay, the last time the video went down to $760, $765 a share, in 1 week it went back up to $877 a share. Okay, so what's my target buy price? Well, my target buy price is going to be what? In the sevens. Anywhere in the sevens. Now, the only caveat is they got their earnings report coming out on May 22nd. You're talking about 21 days from today. May 22nd. They have their Q1, fiscal year Q1 earnings report that's coming out. I'm going to be monitoring that because, see, I believe if they beat expectations on their Q1 earnings, I think the stock goes to $1,000 a share that day or the very next day. It goes to $1,000. That's the only time I will break code in buying the video over the 700s. Today, I won't buy it unless it goes into the 700s. I won't buy it in the 800s today. Today, I would only buy it if it goes into the 700s. But before the earnings report on May 22nd, if it's in the 8s, I'm going to buy it because I think after the earnings report comes out on the 22nd, 23rd, I think it goes to the moon. No scientific proof that'll happen, guys. I'm just giving you my thought process and what I'm going to be doing. But today, if it sells off enough to get down to the 700s, I'll buy it. If not, I'll keep the money in the war chest. Right? Same with Tesla. If it gets down to $150 a share, like I always told y'all, that's my buy price on Tesla, $150 a share. If it gets down to that, then I'm buying it. Let's see what it's doing today. It's 181 right now. So I'm not buying today if it stays at 181. I'm not buying the video today if it stays in the 8s. But I got the war chest ready to go just in case the Fed comes out and gets a little crazy and they get real hawkish and the market freaks out. I'm ready. I'm ready. I am ready to strike like a king cobra. Right now I'm at 838, guys. That's where we're at on Tesla. I'm gonna say on the video right now, 838. It ain't that far from the 700s. It gets in the 700s. I'm all over it. I'm all over it if it gets in the 700s. because that's easy money. That if it gets in the 700s, that's an easy 50, 60, 70, $80 a share. And the next couple of days, it'll go back up. I know it will. And then I'll just take my money out of the reserve money. I'll take it back out, make my profits, and put the reserve back in the reserve. Remember, that has nothing to do with my dollar cost averaging, though. Dollar cost averaging every month. That has nothing to do with my dollar cost averaging long-term wealth building strategy. I'm talking about my short-term wealth building strategy. See, I got two strategies. I got a long-term and I got a short-term. The long-term strategy is to dollar cost average into the stock market no matter what. Good days, bad days, middle days, I don't care. I'm just going to do that for 10 years. It's proven to be successful. The short-term strategy is all about my cash reserves. Well, Richard, I don't got no cash reserves. How do I do that strategy? Get you a cash reserve. That's how you do that strategy. Right? Cash reserves come from what, guys? Side hustles. Right? It comes from income above and beyond what you need to live. That's how you can create a reserve. You can't create a reserve if you're living paycheck to paycheck. You can't. You can't create a reserve to buy assets if you got a lot of credit card debt. If you got a lot of car loan debt that's sucking all your money from you. If you got a big old house you're living in with a big old monthly payment sucking all your cash. You can't have a reserve. Now, don't get me wrong. I haven't always had a reserve, but I built my reserve up through side hustles. I built my reserve up through investing in real estate for income. I built my reserves up some investing in the stock market. I also built my reserves up by not spending my money on things that don't put no money in my pocket if I couldn't afford to do that. Right? So you got to have a cash reserve to be able to do the short-term strategy, but you just got to have income to do the long-term strategy, right? So I recommend all people do the long-term strategy and then do the short-term strategy if you got additional cash left over after you meet your investment requirements for your long-term strategy. Then go to your short-term strategy with cash reserves like I do. That's the investment plan. It's pretty simple, right? That's how, though, we're gonna make some money. Guys, there's a great opportunity right now with stocks, with paper assets. We're gonna talk about crypto a little bit too. It's tanking. It's tanking. It's sinking. It's like 57,000. It's sinking. It's sinking. I told some of y'all weeks ago when it was in that 70,000. Some of y'all, I told y'all, don't get greedy. I told some of y'all that don't get greedy when it was in the 70s. Some of y'all should have got out when it was in the 70s. But greed takes over. Oh, it's going to go to 100. Okay. It's a long ways from 100 right now. But we'll talk about it. It's a long ways from 100 right now. It's sinking like the Titanic. So just letting you know, for all you crypto folks, it's sinking like the Titanic. So let's talk about stock market. What did the stock market open up today? So what are the big time, big boy investors thinking about today's Fed meeting and what will happen? See these big time investors, guys, they're trying to position themselves to win. They're trying to figure out what's going to happen so that I can position myself to win, to make money, right? Let's see. S&P 500, here's the headline. S&P 500 inches lower. Again, guys, AKA opportunity to get rich. See, anytime the S&P goes lower, guys, that's an opportunity for a guy like me to get rich. I don't know about you, but it's an opportunity for a guy like me to get to double down and get rich. I love seeing the S&P go lower. Why? Because I got a 10-year window. So I got a 10-year window. See, the key to buying these assets and getting rich, guys, is buy these assets every single month, every single week. But you really got to buy them when they're trading lower. That's where the wealth is made. So anytime the S&P goes lower, I keep buying. Because I know at some point it goes higher. How do you know that? Because over the last 10 years, it's went up by 3,000 points. That's how I know it. 2014, it was trading at 2,000 points. Today, it has been over 5,200 points. Not today, but I'm talking about this year. That's how I know it's going to go up. In the next 10 years, it will go up, guys. It will not stay at 5,000 points. I promise you that. In the next 10 years, I'm telling you, in the next 8 to 10 years, it'll double. With what's going on with AI, guys, you guys got to understand what's fitting to happen with this AI technology. You do understand your top 7 companies in America. I'm talking about these are big boys, guys. When you add all these companies together, do you know what type of market cap they have when you add them all together? They got about a $10-12 trillion market cap. That's larger than any country that's larger than China. That's larger than well, I ain't gonna say it's larger than China. I take that back. China might be larger, but outside of the United States and China, those 10 companies dwarf everybody else in the whole world, every other country. Just those 7 companies with their market cap. Their market cap for those 7 companies are larger market caps than every company in the UK, every company in Canada put together, every company in everywhere else in the world except China and the United States. No other countries other than China and the United States got a bigger value when you total them all up than these 7 companies. And why do I mention these 7 companies? Because they're getting ready. They're all making heavy investments in AI. All of them. And if you read about these 7 companies, everybody believes their revenues go up tremendously over the next 10 years. You got people out here saying Amazon and Alphabet will be the 2 most valuable companies in the world by 2030. See, you got to go and look at why they're saying that, though. If you look at Amazon, you already know it's a 900-pound gorilla when it comes to merchandise and moving merchandise, right? Retail merchandise. It's a 900-pound gorilla. But what you don't know is what do they call it? Their AWS. That network, that's where the money is, and that's what they're growing. So if you go and do some research on Amazon, they're a beast. Same with Alphabet. When you think about Meta and the investment they're getting ready to make in AI, and they're getting ready to buy most of the stuff from NVIDIA, you'll see why these companies in 10 years, guys, are not going to look like they are today. Market value standpoint. They're going to be more. So guess what? Stock price goes up. So S&P goes up. Why would the S&P go up when these 7 companies go up? Because they represent 28% of the value of the S&P. 7 companies represent 28% of the S&P 500. So if these guys go to the moon, guess what happens to the S&P? It goes to the moon. That's why I'm trying to tell y'all, there is no way the S&P ain't 10,000 points in the next 10 years. That's my opinion. It will double itself. It more than doubled 2014 to 2024. So all I'm telling you guys is you better get yourself positioned to take advantage of these cheaper, less expensive, discounted assets while you can. And I think it starts today after the Fed meeting and the Fed chair comes out with his comments. I think he will be hawkish, and I think the market will sell off. That's my opinion. So the S&P inches lower as Wall Street readies for the Fed rate decision, right? The S&P 500 opened slightly lower on Wednesday as investors looked ahead to the Federal Reserve's rate policy decision. The broad market index slipped 0.1% while the NASDAQ hovered near the flat line. The Dow added 28 points or 0.1%. Amazon, I keep telling y'all guys, listen, man, this Magnificent Seven, y'all going to continue to hear this, man. Everywhere you go, you're going to hear the Magnificent Seven. And the reason you're going to hear it is because they're the most valuable companies in the world. And all of them are heavy, heavy, heavy investing in AI. Whether we like it or not, guys, the future is coming. And AI is going to be a huge part of the future, whether you like it or not. You just saw what Tesla got approval in China to do. Completely self-driving cars. They didn't have that approval a week ago, 2 weeks ago. They just got approval. And if they got approval like that in China, come on, guys. Y'all know how China is. They don't play the radio over there. And they've allowed Tesla to move forward with these completely self-driving automobiles. These people got 1 billion people over there. They got 1 billion people over there. So if Elon get that right, what do you think gonna happen to Tesla stock? I'm just telling you guys. I keep talking about the Magnificent Seven, not because I'm some smart guy. I'm talking about them because everybody else talking about them. And they're right. So here we go. Amazon advanced about 3% following better than expected earnings and revenue in the first quarter, while chip maker Advanced Micro Devices tumbled. Could somebody say competitor to NVIDIA? Tumbled 7% after issuing an inline revenue forecast for the current quarter. Super Micro Computer slid 12%. That's another monster too, as revenue came in slightly below the street's consensus estimates. Now, these are competitors. These are competitors of NVIDIA. What do you think is going to happen to NVIDIA stock if they come out in the first quarter and knock that thing out of the park? What do you think going to happen to their stock? I'm telling y'all, man, the writing is on the wall. For me, the writing is on the wall. I'm telling you, in my opinion, the stock is going to $1,000 a share when they come out with earnings on the 22nd. They're going to beat these guys. Look at the last 3 quarters for NVIDIA. Have they missed? Have they missed? Have they missed in the last 3 quarters? Have they missed? I'm just telling you. I'm telling you, be ready. I'm telling you, right now today, they're trading at 839. They'll probably slide. But my goodness, if they get in the 700s today, I'm buying. Period. I'm buying. If they get in the 700s, I'll ride that 700 for a couple of weeks because I know, matter of fact, I may just hold it because I'm telling you, when them earnings come out in about 21 days, net worth, can somebody say increase in net worth? Elsewhere, Starbucks tumbled 15% after the coffee giant slashed its outlook following disappointing same-store sales. Is that an opportunity, guys? You got a 15% discount on Starbucks. #1 coffee chain in the world, right? Will they bounce back? Right now, you got a 15% discount on them. Elsewhere, Starbucks tumbled 15%. How do you not consider a 15% discount on the #1 coffee chain in the world if you believe they're going to come back? I'm just giving you opportunities to think about. Following disappointing same-store sales, while CVS Health tanked 18% after posting disappointing earnings and cutting its profit guidance. CVS on every corner in America. 18% discount right now. Is that an opportunity? You got a 15% discount opportunity on Starbucks. All leaders in their industry. See, that's the key, guys. This ain't 15% discount on Dunkin' Donuts. No, this is a 15% discount on the 900-pound gorilla, which is Starbucks. You got a 15% discount on a 900-pound gorilla. Here's the question you got to ask yourself. Will they recover? I say they will. I say you pick up yourself 15% net worth. That's what I say. Will CVS recover? I say they will. Why? Because they're the 900-pound gorilla. Them and Walgreens. Matter of fact, I think they're bigger than Walgreens. Will they recover at some point in the future? I think they will recover the 18%. I think they will. So here are two companies that you get a 15 and 18% discount. And all you got to do is take the discount and wait. They get back to historical numbers, you just increase your net worth 15%, 18% with that purchase. I'm not telling you what to do, guys. I'm just trying to give you real opportunities out here in the real world where people make money. This is how people make money that really know how to make money messing with paper assets. They look for giant companies with great history, number one in their industry, and they look for discounts. They look for discounts. Where's a discount? Oh, shoot, CVS, 18% discount, easy money. I might have to hold it 6 months. I may have to hold it 8 months, but easy money, especially when rates come down at some point in the future. Easy money. Starbucks, 15% discount, easy money. May have to hold it for 6 months, 8 months, a year, but it's easy money when rates start coming down. Just saying. So let's keep moving. Traders are now looking toward the Fed's interest rate decision Wednesday, which is today. The central bank is widely expected to hold interest rates steady, according to the Fed Funds futures pricing data. Wall Street will be looking for clues. Didn't I just tell you that? Investors are sitting back right now, big boys, saying, what they gonna do today, guys? Which way should we go? Hawkish or dovish? Either way, we're gonna make money, but which way are they going? That's what investors are saying right now. Big boy investors, right? Big boy investors. Wall Street will be looking for clues from Fed Chair Jerome Powell on what needs to happen before rates can come down. That's what they're looking for, guys. Nobody believes they're going to reduce rates today. Nobody believes they're going to increase rates today. But what people are waiting on is direction. They're waiting on directions from the Fed. Guys, what y'all going to do? You going to barbecue or you going to mildew? You going to barbecue means you're going to reduce these rates. Mildew means you ain't going to reduce these rates. So what are you going to do? Barbecue or mildew? That's what big boy investors are waiting for. A barbecue or mildew. We'll see at 2:30 p.m. Eastern time, right? We'll see. Either way, let me be straight for the record. Either way, I get rich. Doesn't matter to me. Either way, right? Either they come out hawkish, I'm buying the dip. They come out dovish, I already got money in the market. 75% of my net worth is in the market. So it goes up, my net worth goes up. So I don't lose. See, I take the reserve money if they go hawkish and I buy the dip. If they don't go hawkish and they go dovish, my money already in the market and it's just going to go up in value. Because I'm in the market 365 days a year. I don't take no breaks, right? I don't take no breaks to move my money to the money market, to contemplate what I want to do when I'm not at wealth. I'm not sure what I'm taking my money out of the market for when I'm not at wealth. It'd be one thing if I'm at wealth and I'm rich and I'm trying to protect my wealth. I get you taking it out. But when you're not at wealth, I'm not sure what we're getting the break for. But hey, that's just me. Just my little 2 cents. We expect, here's the big boy investors. Here's what the big boy investors are saying. The big boy investors are saying, we expect the FOMC's statement at 2 p.m. in Fed Chair Powell's press conference tone to reflect the committee's hawkish. This is what they're expecting now. This is what they're expecting. We expect the FOMC statement at 2 p.m. Fed Chair Powell press conference after that. The tone to reflect the committee's hawkish shift 2 weeks ago. This is what one of your research economists are saying. That said, looking out over the intermediate term, we believe that the growth and employment outlook is likely to have a bigger influence on FOMC's decision-making and overall equity market returns. Investors gained another hint into the state of the labor market ahead of Friday's April jobs report. That's another big boy report coming out, guys. I'm telling you, that jobs report's coming out on Friday. We're going to be all over that thing, though, on this channel. I'm going to let you know. We'll be all over it. So, hey, 10:30 a.m. Eastern time on Friday, we all over this thing. So, be here if you want to know what's going on, or go out and do your own research, right? Either or is fine with me. Here we go. Investors gained another hint into the state of the labor market ahead of Friday's April jobs report. ADP's private employment data showed more workers added than expected last week. Last month. So ADP comes out with their report ahead of the regular jobs report. The difference between the two is ADP's report is private. It's private enterprises, like regular companies. It don't include no government workers and all this other fluff. It's just private employment, right? It's just businesses. Got nothing to do with the government stuff. When the other report comes out on Friday, that includes everything, government employees. And we already have seen, guys, over the last 3 or 4 labor or jobs reports, who are the people at the top adding the most jobs over the last 3 months? Healthcare and the government. Healthcare and the government. These are the two industries adding the most jobs. Out of the 300,000 jobs added in March, 150,000 were from those two industries. What in the world the government doing adding 80,000 jobs when they can't even they don't even have enough money to run the country. But they adding 80,000 jobs a month. Boy, this is crazy in this country. We don't even have enough money to pay our own bill. We got $34 trillion in debt, but we adding 80,000 jobs a month. Government. Lord. Woo. Good old government. So ADP came out with its numbers, and ADP's numbers showed that the economy added more jobs than what the market expected. That's not good for interest rates coming down, guys. That's not good. So that just tells me when we get the jobs report on Friday, it's going to be hot. That's what that tells me. That report is going to be hot, right? It's going to be hot. So anytime you got a hot report, labor report, you better believe the Fed don't like that, because they know with hot labor reports, they can't get inflation down to 2%. They need labor market to cool off. And right now, it's not cooling off. So they're going to keep rates higher, right? Wall Street is coming off a losing session after the Dow and the S&P both slid more than 1%. The tech-heavy NASDAQ declined 2%. Bond yields jumped after the first quarter's employment cost index came in higher than expected. And that's just what? Big boy investors flee into safety, right? When you see bond yields go up, that's just money coming into bonds, coming out of the stock market. That's all it is. In my opinion, it's my opinion. I'm no expert, but I'm giving y'all my opinion. You may differ on that, but anytime you see outflow from the stock market, it's an inflow to the bond market. Bond yields go up because of demand. Stock market goes down because of lack of demand. That's all it is, right? But again, I keep telling y'all that's a good thing for us. We want it to go down for lack of demand so we can buy these assets at a discount. We can go think about putting a company like Starbucks or a company like CVS in the portfolio because they got heavy discounts right now. They got 15 and 18% discounts on those two big boy blue chip companies that at some point they bounce back. CVS ain't going nowhere. I can promise you that. CVS ain't going nowhere. Starbucks ain't going nowhere. Not the money Starbucks make around here. Every time I go by Starbucks, the line right around the corner. Somebody paying $4, $5, $6, $7 for a cup of coffee. We got a teenage daughter. She go to Starbucks every morning with her mom. Every morning. Every morning that she on her way to school, they pretty much go to Starbucks. And she don't get the little cup. She get the big boy cup. The big boy, what they call it, venti. She get the big boy one. That thing dang enough $7. I'm just telling you guys. Let me tell you something. People will go to Starbucks and won't eat lunch. They'll go to Starbucks and just miss lunch. Oh, I'm gonna use my money on Starbucks. I'm telling you, Starbucks gonna bounce back is my point. They down 15%, CVS down 18%. Maybe two big boy blue chip companies you wanna put on the watch list. I wouldn't put them on the watch list for too long because you're gonna lose ground. Right now is an opportunity. You may wanna consider that. Do your homework and consider it. Do your homework and consider it. The month ended on a sour note for all three major averages, with the S&P and the NASDAQ posting losses for more than 4% in April. The Dow fell 5%. Its worst monthly performance since September of 22. All opportunities, guys. All of that is just opportunity. That's not panic. That's opportunity. This is where wealth is built. See, wealth is built when assets decline in value and people are smart enough to understand that they will go back up in value at some point. That's it. This is not, you don't have to be a really, really, really smart person to know this, because I'm not. I'm not that smart. But I do know when I see a company like Starbucks 15% discounted, and I know Starbucks ain't going nowhere. I mean, I don't get it. CVS 18% on sale. I don't get it. So you just got to understand, when these companies go on sale, a lot of times they go on sale for no fault of theirs. Now, I know they said, okay, Starbucks missed some numbers, CVS missed some numbers, but trust me on this, when them interest rates come down and that money flood back into our economy from people borrowing money cheap and companies being able to borrow money cheap, you think Starbucks line ain't gonna get no longer? Guarantee you it is. I guarantee you, boy, when people got more money, they gonna go to Starbucks more. I'm just telling you, they ain't going nowhere. It's one of the great companies, man. They ain't going nowhere. So there we go on the stock market. Just wanted to give y'all a little bit of what's going on with the stock market in anticipation of today's conclusion of the Fed meeting. Just wanted to give y'all some nuggets, some golden nuggets, maybe some stuff I gave you in the video. It's down. It's trading at 839 right now, guys. It was just trading at 877. It was just trading at 877. So it's down about $40 a share. Who gonna tell me $40 a share is not a nice pickup in a couple days, a week, when it bounced back Friday or next Monday back up to 877, 890? That's $50 a share, man. So I gave you in the video, I gave you CVS, I gave you Starbucks, right? Whether you do anything with that, that's on you. I'm not your financial advisor. I'm just trying to give you some tips, because I know a lot of y'all always, oh, golly, you talk about all this stuff, but you never say what might be a good opportunity. Bam, there you go. There you go. Just gave you something. Whether you take it or not, that's on you. That's not on me. That's on you. I'm just giving you information for you to be able to go figure out a way to build your wealth. Here we go. A little bit of Bitcoin. I told you I'd give y'all a little bit of Bitcoin. Matter of fact, I'm going to save Bitcoin because I know a lot of y'all ain't into Bitcoin. So let's save Bitcoin to the end, and you can get your daily dose of Bitcoin at the end. So a lot of y'all don't like Bitcoin. Y'all don't do Bitcoin. So I ain't gonna put them in the front just yet. But here we go. Let's talk about another 900-pound gorilla real quick, another opportunity. I'm going to keep pounding this. Analysts revamp NVIDIA's stock price target ahead of earnings. Remember, I told you they got their earnings coming out on May 22nd, guys. Let's see what the market is saying about them. Back in March, NVIDIA had some big news to share. The chip maker used its GTC event to unveil the Blackwell GPU architecture, which NVIDIA said will power a new era of computer. They unveiled this thing at their big old show. They had robots on the stage and all kind of stuff, right? All of that on stage, right? The company said Blackwell will enable organizations to build and run real-time generative AI. That's where companies like Meta comes into play. Companies like Amazon comes into play. Companies like Alphabet comes into play. Companies like Tesla. They need this AI technology to do the things they want to do. That's why all of those companies are buying those GPUs and all this other stuff from NVIDIA. They're the leader in the industry, guys. They have 80 to 90% of that market share, right? So it says the company said Blackwell enable organizations to build and run real-time generative AI on trillion parameter large language models. Meta, Amazon, Tesla, all are going to be buying from these guys, right? It says language models at up to 25 times less cost and energy consumption than its predecessor. This is what the type of technology NVIDIA has, right? For 3 decades, we've pursued accelerated computing with the goal of enabling transformative breakthroughs like deep learning and AI. This is what the CEO said. Generative AI is the defining technology of our time. I told y'all guys this stuff is coming, right? It's coming. Blackwell is the engine to power this new industrial revolution, working with the most dynamic companies in the world. Meta, Tesla, Amazon, right? Working with these type of companies, right? These are customers of NVIDIA. Working with the most dynamic companies in the world, we still realize the promise of AI for every industry. NVIDIA currently boasts an estimated 80% share of the market for AI-powered processors. They got 80% of the market, guys, for AI-powered processors. The company used last month's GTC event to unveil the newest iteration of its lineup, the Blackwell GPU architecture. The architecture could command a 40% premium to the current range of H100 chips, which could go from between 30,000 and 40,000 each. NVIDIA is scheduled to report first quarter earnings on May 22nd. Analysts surveyed by FactSet expect the company to report $5.60 per share on revenue of $24.75 billion. That's just for the first quarter. Guess what they did for all of last fiscal year? $60 billion. They're going to do almost half of that in 1 quarter. If they keep that run rate, they're going to do almost $100 million this year. I'm sorry, 100 billion. What does that do to the stock price? Let me tell you. Let me tell you what it does. What does it do to the stock price? A year ago, NVIDIA posted $1.09 per share on revenue of $7.19 billion. This was a year ago, guys. So here's the deal. They go from 1 year ago, first quarter, of $7.19 billion to a fast forward a year later to $24.75 billion in the first quarter. They go from a per share, they go from a posted earnings of $1.09 per share to what? $5.60 per share. On February 21, NVIDIA beat Wall Street's fiscal fourth quarter targets, delivering its third quarter of triple-digit percentage growth in sales and earnings. The world has reached the tipping point of new computer era. Check this out. Check this out. NVIDIA's chief financial officer during the company's earnings call in February. This is what she said. 1 trillion installed base of data center infrastructure is rapidly transitioning from general purpose to accelerated computing. Listen, man, listen. I just wanted to give y'all that little tidbit on the video because I'm heavy on the video. Y'all know that. And I'm not trying to influence you one way or the other, but people are asking me, Richard, what are you investing in and why? I'm telling you, this is why I'm investing in the video. When a company can grow its revenue year over year, first quarter last fiscal year, first quarter this fiscal year, from 7 billion to over 24 billion. Help me out here. When you can take your net, what it says, net, let me make sure I don't get this terminology wrong. When you can take your net earnings, right? Your net earnings of 109 per share. You go from 109 per share net earnings to $5.60 per share net earnings. I don't know what else you need to know about that, guys. That's a monster. I mean, I compute these people are on pace to do $100 billion this year. They did 60 last year. They may even reach 120 billion. They may double this thing in 1 year. I'm telling you, if they hit this thing out of the park on the 22nd of May, it's going to $1,000 a share. I'm just telling you. That's my point. That's my opinion. Where are they at today? 839. Yeah, 839 today. Maybe even trading lower now. Where's the opportunity at? Just gave you 3 or 4 of them. So you make up your mind what you want to do, but I just gave you 3 or 4 opportunities. Here we go. Let's talk about a little bit about the Fed. The Fed could only cut rates to help the U.S. service its soaring debt. So some people think, okay, if the Fed does cut rates, the only reason they're going to cut them is because we got so much debt here in the United States. The only reason the Federal Reserve might be tempted to cut rates would be to help the U.S. cover interest payments for the national debt, according to a prominent fund manager. His comments come ahead of the Federal Reserve's monetary policy decision on Wednesday, which could shed some light on U.S. central bank's rate trajectory. The Fed is widely expected to keep the benchmark rate at 5.5. Traders are currently only pricing in about a 50% chance of the Fed cut taking place in September. I think it is for the birds to think that in a world where inflation is bottoming and in some cases turning up, and there's early signs of life, partially due to the strong economy with massive government stimulus behind it, that they are going to be cutting in any meaningful way. From the way we have thought about it for the last 15 years, I think for longer too, there is no economic rationale for cutting. The reason they might cut is because the U.S. government can't afford, I already told y'all that, can't afford it. And that's much scarier reason to have the cut. The U.S. government is paying more to service its ballooning debt after a period of rapid interest rate hikes, tax cuts, and massive stimulus programs designed to support the economy during the pandemic. A recent analysis by the Congressional Budget Office showed that the federal government is spending on interest payments is expected to climb to $870 billion this year. This forecast jumps 32% from last year's interest expense of $659. So we're getting to almost $1 trillion a year in just interest payments, guys. That's why this guy is saying the Federal Reserve may have no other choice at some point but to cut rates in order to help out the federal government. That could be true. That could be true. So here's the key for today. If you can, make yourself available at 2:30 p.m. Eastern time so that you can hear what the Fed chairman says and you can hear clearly what the direction he's going. If you can't, clearly I'll be here tomorrow at 10:30 a.m. Eastern time to walk you through everything. But I recommend for investors like us to start getting ourselves around this type of information. And also what I recommend you do is write down anything that you don't understand. Write it down and then go to the $1 trillion research lab and research it and find out what it means. We got to stop. Oh, I don't know what that word means. Tell me what that word means. No, just go to the $1 trillion research lab and type it in and it'll tell you what it is. We got to start acting like investors. We got to start acting like we're financially responsible for our pot of gold at the end of the rainbow. We got to research some of this stuff on our own. It's not that hard. All you got to do is write it down. If someone says something that you don't understand, write it down, go to Google, type it into Google, and Google will tell you what it means. But see, we've gotten to a point where we're so dependent on somebody else feeding us information, we've lost the art of being able to go out and find information on our own. We've lost that somewhere. We got to regain that. We got to be able to go take terminology, put it in Google, research it, read what it means, and move on. That's what we got to get back to doing, right? So if you're listening to the Fed chair this afternoon and he says something you don't understand, write it down, then go research it. That's my recommendation to you. Because that's what I do. Anytime I read something I don't understand or it's a word I don't understand, I just go research it. And then I got a clear understanding of exactly what it means, right? So that's what I'm going to ask you to do. Do the same thing. You know, make sure you understand exactly what you're doing. I've given you 3 or 4 opportunities. Paper assets. Now let's talk about crypto. Here's an opportunity with crypto. If you're a crypto person, if you like crypto, if you're considering investing in crypto and specifically Bitcoin, here's what's happening right now with Bitcoin. Bitcoin sinks to 57,000 to start May as investors brace for Fed rate decision. See, I keep telling y'all, Bitcoin and the stock market are tied at the hip. They're tied at the hip. I don't care what nobody says, they tied at the hip. Stock market sells off, Bitcoin gonna sell off. Stock market goes up, Bitcoin gonna go up. They got the same investors, right? They got the same investors. Same investors. So just know that, right? Here's the thing. Bitcoin on Wednesday slid to its lowest level in over 2 months amid broader risk off sentiment in market as investors keep an eye on U.S. Federal Reserve's upcoming interest rate decision. The cryptocurrency dropped as much as 7% to 56,526, its lowest level since February 27. According to CoinMetrics, it was last lower by 4% at 57,413. Investors are eyeing the upcoming interest rate decision from the Federal Reserve, which will include its 2-day policy meeting on Wednesday afternoon. The central bank is widely expected to hold interest rates steady. Investors are looking for clues from Fed Chair Jerome Powell on what needs to happen before rates can come down. Head of the digital, here's another Bitcoin economist. He's saying, ahead of the, he said that he sent a note out on Wednesday that Bitcoin's drop below 60,000 has now reopened a route to the 50 to 52 range. See, again, what happens is you get these investments, especially like Bitcoin, the market accepts it or the market rejects it. Right now, they're in a rejection phase. The market's rejecting the price. So the price keeps falling to, it falls to a price that the market will accept it. This guy is saying it could drop as low as 50 to 52,000 per coin before it stabilizes and the market accepts it. And I was telling some of you guys months ago, a month ago, right? February, March, guys, if you've made your money, get your butt out of there. You've made your money. You know it's a pump and dump. You've made your money. Get out. But some of us get greedy and we stay. The driver seems to be a combination of crypto-specific and broader macro, Kendrick said. He noted the primary factors impacting the token were 5 days of consecutive outflows from the U.S. spot Bitcoin exchange traded funds, as well as a deterioration in the macro backdrop and worsening market liquidity. All that means is people taking their money out. That's all that fancy, what he just said. People taking out, people taking profits, people getting out. That's why it's dropping, guys. People getting out. Now, you can be the last one left holding the bag. Go right ahead. But people getting out of there, I'm telling you. People are heading for the door. They're heading for the exit. So you can sit in there by yourself. Go ahead. I ain't telling you what to do. Don't be emailing me, oh, golly, what you said and I sold. No, I'm not telling you to sell nothing. What I'm telling you is what people are doing. It's black and white. The price is falling because people are, they just told you. They just told you. They just told you. The driver seems to be a combination of crypto-specific and broader macro. He noted the primary factors impacting the token were 5 days of consecutive outflows from the U.S. What does outflow mean? Outflow means people are taking their money out. That's what an outflow is. An inflow would be people putting money in. An outflow would be people taking their money out. Why are people taking their money out? People that have made enough profit, they smart, they understand, listen, I'll live to fight another day. I'd have made my money in crypto. Let me get out of here. Don't be greedy. Right? As well as a deterioration in the macro backdrop, worsening market liquidity. Kendrick added that the reaction to the launch of the spot Bitcoin ETFs in Hong Kong earlier this week was poor. Now, y'all know Hong Kong is a financial mecca. It's a financial juggernaut, Hong Kong. And if it was a poor reception to the spot Bitcoin ETFs that were launched in Hong Kong, guys, what are they telling you here? If Hong Kong didn't embrace it, one of the financial hubs in the world didn't embrace it, something's happening. I don't know what's happening. I'm just telling you what these people are saying. I don't know what's happening. I don't got no money in Bitcoin like that. I don't invest in Bitcoin, period. All my money be in big boy, blue chip paper assets like real companies. I don't invest in no Bitcoin because it ain't a real company. It's just whatever the next guy will pay for it, right? That's starting to fade, especially as the Fed keep interest rates higher for longer. Kendrick added that the reaction to the launch of the spot Bitcoin ETFs in Hong Kong earlier this week was poor, focusing on small first-day turnover volume from the ETFs in the millions of dollars, despite the net asset positions of the ETFs being solid. Of course, liquidity matters when it matters, but with a backdrop of strong U.S. inflation data and less likelihood of Fed rate cuts, it matters at the moment. The downward price action in crypto markets also comes a day after former CEO of Binance, I can't pronounce his name, was sentenced to 4 months in prison over money laundering charges. I already told y'all guys this Bitcoin thing ain't nothing but a big old Ponzi scheme, big old scam, but y'all stay on in there. Go ahead and diamond hands, go ahead and hodl all the way back down to about $10,000 a coin. I'm telling you, don't get greedy. Look at your win, take your win. Don't get greedy, take your win. This is not operating companies. This is not NVIDIA. This is not the Magnificent Seven. This is not Starbucks. This is not CVS. This is Bitcoin that has no underlying nothing to support it other than what the next dude to pay for it. That's it. There ain't no operations. There ain't no products produced. It's just what the next guy will pay. That's all it is. I'm telling you, consider your exit strategy. If you seeing what's happening, writing's on the wall. Writing is on the wall. Fed come out hawkish today. May drop even further. Just saying, guys, it may drop even further if the Fed come out hawkish today. I appreciate the super chats from the two folks that sent the super chats. Thank you very much. I appreciate that. Thank you. I appreciate you rocking with me. I appreciate you making an investment in my channel. Thank you so much. I don't have my computer here in front of me, so it's hard to see what the question was, but obviously you guys know I don't do Q&A in my normal live streams anymore. No more Q&As in the live streams, just straight live streams like I did today. That's all we'll have 7 days a week on the YouTube channel. If you want the Q&A again, then of course you got to go over to the website and sign up for the paid membership club. That's where we'll be doing the 90-minute weekly Q&As in the membership club. So hopefully, if that's something you're interested in, certainly get over there, sign up, link down in the description box for the website. Get over there and check out them digital products. Grab yourself a few of those digital products to help you get to your pot of gold at the end of the rainbow. Like I said, over 65,000 people have went to the website, guys, which is blows me away. Now, for some of y'all, that may not be that much, but you got to think about it, guys. It's all organic. That's all off of me doing what I do on this YouTube channel, mentioning it every day like I do. It's not paid advertisement from no social media. All I do is mention the website every day on my YouTube channel, and I'm going to do that every day to Kingdom Come. I'm going to do it every day till Kingdom Come. And y'all spiritual people know what I'm talking about, who believe in God and Jesus Christ. You know what I'm talking about. I'm going to do it until Kingdom Come. So if you don't like it, tough. Find another YouTube channel if you don't like me promote my own business. I've never seen anybody that don't want you to promote your own business on your own YouTube channel. No, don't promote your business. I don't want to hear about your business. Boy, y'all funny. Some of y'all are really, really funny. Don't promote your own business on your own YouTube channel. I mean, what? Huh? Okay. Nevertheless, get down to the description box, click on the link to the website. It's the second link down in the description box. Grab yourself some digital products and then go sign up for that paid membership club, man. That's where the Q&As are going to be. That's where the deep dives are going to be. That's where the mentoring is going to take place. So anybody that's looking for mentorship, that's where it's at. And I get it all the time, every day. Hey, guy, I want you to be my mentor. I want you, and I don't have a problem with, and what I've been telling folks is the mentorship really, guys, is the YouTube videos. Now I can really say, okay, if you want to be mentored, get over to the Rich and Famous Millionaire Mentor website and sign up for the paid membership club. That's where the mentoring is going to get done. So if you really want mentoring by me, invest in yourself. If you don't want to invest in yourself, just continue watching the YouTube videos. And then all you got to do is take the information from the YouTube videos and execute, which many of you do, and that's okay. But there are people out there that need an extra level of something. And those are the people that are signing up for the membership club. They need a little extra something. They need direct access to me. And that's how it's going to be, guys. Those folks will take priority over everything else. Because why? They're making a financial investment in themselves. I owe them a fiduciary responsibility now. I don't owe anybody no fiduciary responsibility on the YouTube channel because I do it all for free. Although I do have a deal with YouTube where they pay me ad revenue, but don't cost you nothing, is what I'm saying. It's free to you because it doesn't cost you anything but some of your time, which is fine. But there are people that need a little extra something. And they're not afraid to invest in themselves to get it. So that's the membership club. Get over to the website, grab some of them digital products, sign yourself up for the membership club, and let's rock and roll. May 6th, the week of May 6th, we're kicking off the first live stream. So be prepared for that. Club members who watch my videos on YouTube on a consistent, be ready for that. I think we got a date that's already locked down because I asked you guys through the membership club, what day of the week and what time did you want to have the 90-minute live streams? And overwhelming response has come back. So I'll email you guys. Matter of fact, I'll email you guys today to let you know exactly the day and time. And like I said, I'm working on if they're going to be able to have replay capability through the venue that I'm using. So I'm working on that. So just hang in there with me. We got more information coming on that. Last thing, guys, let's get down to the description box. Click on that Moo link. Down in the description box, first link is the Moo link. Click on the Moo link if you want to get yourself 10 free fractional shares of the most valuable companies in America. That would be the Magnificent Seven. If you want those companies, NVIDIA, we talked about NVIDIA. I told y'all huge upside with NVIDIA. One of the major companies that I'm buying. You don't have to buy it, but I'm just telling you I'm buying because that's what I do on my YouTube channel. So you got NVIDIA, you got Tesla, you got Apple, you got Meta, you got Amazon, you got Alphabet, and you got Microsoft. That's the Magnificent Seven. And when you sign up for the Moo account, using my link in the description box, first link, when you sign up and put $100 in, they're going to give you 10 fractional shares of those big boy blue chip giants, 900-pound gorillas, right? You're going to get those. What a nice way to kick off your portfolio, or what a nice way to add to your portfolio. Remember also, guys, you can use the Moo app to bring in assets from other brokerage accounts. So if you got brokerage accounts all over the place and you want to consolidate them, your stocks and your ETFs, you can use the Moo app to transfer those over, right? Not cash them in, but transfer them over and put them in your Moo account if you want to rock with it that way, right? Or you can keep the other brokerage accounts and just use the Moo account for your Magnificent Seven investments, right? Maybe you got mutual funds and bonds and all this other stuff all over the place, or with other big boy brokerage apps, but you just want to use the Moo app for your Magnificent Seven investments. That's a good way to use it as well, right? You just use it for that. And then the other brokerage accounts you got, you use them for whatever you use them for. Ain't nothing wrong with that. I got 4 brokerage accounts. 4. I got 4 of them, and all of them I use for different purposes. So all I'm telling you is get yourself in position, because the Fed gonna come out today, in my opinion, and make assets cheaper. And when they do, I've already given you the information about opportunity. It's plenty of it out there. We just got to go execute on it. Plenty of opportunity for people to get rich if that's what you want to do. If you want to get wealthy, if you want to build wealth and get to your pot of gold at the end of the rainbow, there is no excuses, guys. It's there. But we got to discipline ourselves. We got to be consistent, and we got to be patient. We got to earn this income. We got to keep what we earn, and then we got to invest what we keep. And we got to do that over 10 years. 10 years, that's the minimum. You got to dedicate and commit yourself to 10 years of taking your income and building wealth. If you'll do that, you'll be fine. That's all you got to do. But many of you have, because I get tons of emails every day from all around the world. I get these emails from all around the world from you wonderful people who have decided that you want freedom over things. Man, that's a great feeling for me to just be able to know the impact around the world that I have by just doing these videos every day and lending my experience to you guys. Because that's all it is. Y'all know I already told y'all I'm no expert in this. I don't try to be somebody on YouTube that I'm not. I'm just Richard Fain, just a regular smuggler that decided to take control of his own financial life. That's all it was. No smarter than you, just a guy that understands, hey, if this company is doing this, they should be doing this in 10 years. That's all I do. And then I just find companies that have a track record of doing exactly what I think they're going to do in the future. That's where the Magnificent Seven comes in. I'm telling you guys, the Magnificent Seven is going to explode. Yet we ain't seen nothing yet. As I've been researching these companies, guys, and reading up on what's happening with them and what they're getting ready to do and what people are predicting they're going to do, it's going to be massive. So if you're not getting down to that description box and clicking on that Moo link and getting your 10 free fractional shares of the, because it ain't going to last forever, guys. I think this promo right here with Moo, I think it's going to end. I think it's going to end sometime in May. There's a limited time. So when you click on the link, it'll tell you exactly when it's going to end. It's going to end sometime in May. So you drag your feet and you try to wait till June. Richard, I thought I'd get the 10 free No, that's gone. Poof. Never to be seen again. It's gone. Poof. Your opportunity is right now. The thing is, guys, why do something tomorrow that you can do today? Why do something tomorrow that you can just do today? Right? What I'm waiting on? No. If you want to act and get those 10 free fractional shares and then start, here's what my recommendation is. You open the Moomoo account, you get your 10 free fractional shares in your brokerage account. Now, they're not going to turn around and give it to you the next day. Oh, Richard, I put my $100 in, and where's my 10 stocks? They ain't no dummies now, guys. These people ain't dumb. They know people will open these accounts and get the 10 stocks, sell them, and get the cash and dip. They ain't having that. So you're going to open that account, and you're going to put that money in there, and you're going to leave it in there for a period of time and start doing something with it. They hold them stocks in reserve until they make sure you're on this platform for the right reasons, and then they give them to you. It ain't no, oh, here's my $100. I'm going to cash in the Magnificent Seven, close my account. Now I just made me some. No, they're not doing that. And I don't blame them. Don't be opening the account unless you're ready to get rich and get to wealth. You're wasting your time. You're wasting everybody's time. Do not open the Moomoo account if you're not trying to get down and get to wealth. I want people opening this thing who want to get to wealth, who have made a commitment that they're going to put money in that thing every single month and buy the Magnificent Seven or buy their own favorite companies or their own favorite ETFs and do that for the next 10 years to get to wealth. That's the point of it. It's not just to get, just some free stocks and never do anything with it, right? We don't want that. We want to open that account and really dig in and change our behavior with money and become an investor instead of a consumer, right? Consumers buy liabilities and do what? Create debt. Investors do what? They invest in assets that do what? Create wealth. That's the spectrum we want to be on. We don't want to be over here because we're going to be broke and have to work for the rest of our lives, right? So, and again, just my opinion. You guys may have a different opinion, and you can. That's okay. I'm okay with that. Like I said, my channel is to give y'all's my opinion on what's going on in the current state of our economy, with our interest rates, with our stocks and other asset classes, and just lend my general 25 to 30 years worth of experience doing this on my own. Try to help y'all avoid some of the, manholes I fell in. Trying to help you avoid that. Trying to give you, without trying to be an expert, trying to give you companies, big boy companies, that are on discount, that potentially you could go invest in and immediately get a 15 to 18% return on your money. Right? Right? So here's the thing. We're going to button this thing up. 2:30 p.m. Eastern time today, Fed going to be coming out with their decision on rates. The market is either going to go crazy up, or it's going to go crazy down, or it could just stay the same. We don't know. I'm prepared for it to go down. Personally, I'm not saying it will. I'm just telling you I'm prepared for the market to go down, and I'm prepared to go shopping before the market closes today once it goes down. That's all I'm saying. I'm just preparing for the worst. Because if it goes down and I can pick up, like I said, my favorite companies or my favorite ETFs at a deep discount, or maybe I pick up something 10% off. How do you not turn that? How do you not buy that when you know in a couple of days it's going to go right back up? So that's what I'm waiting on with the reserve money. Obviously, the dollar cost average money just goes in every single month like clockwork. I don't worry about nothing. It's automatic. It just goes in, and that's 10 years. That's 10 years. I don't even worry about that money. I don't care if it's up, down, sideways. All I care about is in 10 years, it's worth more in 10 years than it was when I put the money in. That's all I care about. I don't care about in between the 10 years. All I care about is 10 years from now, it's more than what it was when I put it in. And history says it will be, right? At minimum, 8 to 10% better, compounded over 10 years. So I'm cool with that. And then the reserve money, that's short term, right? I'm just trying to get me a quick 10, 15% discount, pick it up, hold that stock until that 10 or 15% discount trades back up again, and boom, I just made myself 10 or 15, 20% like I did on the video, Tesla, boom, done. Put the money back in reserve like a king cobra, ready to strike again, just like a king cobra does, right? You know how a king cobra coil up and be ready to strike? That's how I am when it comes to this reserve money and investing in my favorite companies. I don't buy nothing but my favorite companies. If they're not in the favorite companies list, I don't buy them. That's it. That's all I do. I don't do anything else. I don't do no options trading. I don't do no Forex trading. I don't do no day trading. I don't do no crypto trading. All I do is that. Tesla, NVIDIA, potentially Meta, and then SPLG, FTEC, potentially VOO, VGT, if they get discounted enough. And I've already talked about the discount on those that they need to be. I need to have $100 a share swing in VOO or VGT, and I need to have at least $100 a share swing in Tesla or NVIDIA or Meta, right? So that's it. Those are the parameters for me trading today if the opportunity presents itself. If it doesn't, I'm patient. I wait till it does. That's all. I just wait. I'll get one or two more opportunities this year to strike like a cobra. One or two more opportunities this year I'll get. So that's it, man. Hey, I appreciate y'all guys rocking with me. I'm ready to get out of here. I got a couple things I need to do today. But thank y'all for stopping by the channel again and supporting me and this live stream. Thank you. Again, get down to the description box and support me with the Moo link. Support me with my website link. Support me with the Instagram link. If you don't mind, any link I got down there, if you want to support me and pay it forward to me, that's how you do it. If you want to support me, great. If you don't, that's okay. I'm okay. That's okay. I know I ain't for everybody, but the guys and gals who appreciate what I do on a daily basis and what it takes to do this every single day. One, I do it because I love it. So it's not a chore. It's not something that I dread. I love doing this. But still, I do appreciate you guys supporting me. And the way you support me, guys, is by supporting me through my links in the description box. That's how you support me. How do I support you? By doing this every single day and giving you the honest truth based on what my opinion is. That's how I support you, and answering all of your emails, as long as they're regular emails, not none of the knucklehead emails, but as long as they're regular emails, I'm going to answer them. And of course, now I got the mentorship program through the website, through the membership club. That's the mentorship program. So anybody wants to be mentored by Richard Fain, that's where you got to go. Right? So thank you guys. Appreciate you. See you back here tomorrow, 10:30 a.m. Eastern time. Y'all know I'm here rocking with you every single day, providing you guys with the most current financial information out there. Again, according to Richard Fain and my little skill set. I don't have a really big skill set, but the skill set I do have, I'm pretty good at it, I think, right? I'm pretty good at my own little skill set. But thank y'all for rocking with me. And again, thank you for the super chats. That was really nice of y'all. I appreciate y'all investing in me and my channel. And again, like I said, hey man, go get some wealth today. There's stuff on sale. Go get you some, get the shopping cart, get the financial shopping cart ready, right? Get the cash ready. Get ready to buy some financial items today, because I believe there are going to be some sales later on today. So get ready. Get yourself ready to build you some wealth. Get yourself ready to put some wealth in your pot of gold at the end of the rainbow, right? Hit that thumbs up button, guys, before you get out of here. It's very important that you hit that thumbs up button. I appreciate you rocking with me. Thank you so much. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next one. Peace.